This is Austin Real Estate Investing.
Real Estate Investing.
Using the studio.
We'll be discussing real estate investing in Austin, Texas, and bringing you experts from all different sectors of the real estate game. Your host, Jordan Moorhead, is a real estate agent and investor in Austin and is here to help you get started or to build your portfolio and explore new strategies.
All right, y'all, we're back here for another episode of the Austin Real Estate Investing Podcast. Got Ryan Kelly here. We just wanted to give you a quick market update here as we're moving into the new year. Things have changed quite a bit here in the Austin market since we last did a market update.
Definitely.
Rates have kind of been all over the place. Prices have kind of been all over the place. Demand has been all over the place. I've seen some really unique trends in demand in different price points, which I thought was really interesting. I always sell in a certain price point and we change price points and demand is so different. So it's like a tale of two markets almost.
We're bipolar in some ways right now.
It's really weird. But yeah, again, thanks for tuning into the Austin Real Estate Investing Podcast. We're going to do a quick market update here. Obviously, we're going to talk about where we think the market's going, what we've seen the market doing, where we think interest rates will go. I'm really curious. I love looking back on these like a year or two later and seeing how wrong I was. So
we all thought we'd be back at 5% by now. Nope, not happening.
I was just telling Megan on my team, I recorded a podcast with Jeremy Knight in August of 22. And I remember we were both saying, oh, they're never going to go above 5.5. How wrong were we?
Oh, yeah.
I mean,
oh, yeah. We would love it. By the way, if we were at 5.5 right now, we'd be rocking.
Night and day
market would be fantastic. So it's very hard to tell because I tell clients rates are literally impacted by global change.
So many factors.
You got the bond market. The bond market is bought. American bonds are bought by every country around the world. Our country, it's complicated. So they're watching headlines in the bond market of tariffs and other rates from the Fed and things like that impact the underlying
and that's so confusing
market.
For people too.
Very confusing.
People see the Fed rate and they say, unfortunately, the media says, "Oh, interest rates are coming down," and they're talking about the Fed funds rate, the Fed rate, and they're not necessarily talking about credit card rates or mortgage rates or car loan rates. And yes, that does factor into everything, but people see that. I talked to a lady today. This is, I guess, a great explanation of how confusing it is for people. She thought interest rates were at 4% right now because the Fed funds rate, I want to say, is at around 4%.
Be nice. Yeah.
But mortgage rates today are in the mid sixes.
That's right. The bank is getting 4%. And then they need to lend it to you. Mm-hmm. And they're not going to lend it at the same amount. They wouldn't make any money. So they've got to have a markup. That's where mortgage rates are.
Well, that's an even better point you make there too. I think my highest yield just savings account is at 3.8% right now. I know there's accounts that are higher, but I'd say they're in the 3.8 to 4.5 range, depending on you got money market. My money market account's under 4 now, but then they're lending that money out at 6.5%.
Yeah, they need that spread, right? And so it's interesting to watch the mortgage market. The good news is we have seen the rates coming down from the beginning of this year where they were clearly over 7 through about late February. Now they're down into, if you're a good primary home buyer, you're probably mid 6s right now. Maybe, par rate's about 6.75 today, I think. But, a good primary home buyer could get 6.5. FHA, VA could be low 6s.
Oh, yeah.
So we're already starting to see rates get better. The key is, are they going to stick? Because the last 2.5 years, every time they got better, then they would bounce right back up over 7. So we're all kind of cautiously optimistic, but still waiting to see if they can hold.
I want to say last time we did one of these podcasts, they were getting close to 6, and we thought they were going to go below 6. But obviously
last fall, I mean, I refied at 5.9 in September, thinking, oh man, finally you could really see the rates coming down. This was pre-election, but then things happen, and the rate went from low 6s up a full point by the end of the year. So hard to say. There's too many moving parts to really be able to guess.
Yeah, nobody has any idea. I just I just know that they're lower than they've been in a year. So the lowest they've been in over a year. And that's all I know. That's literally all I know.
We'll take it.
Yeah.
Yeah. For now, if you're a buyer, spring, moving to inventory, looking at housing in Austin, I can't think of a better time.
Oh, yeah.
If, put rates aside, if you're a buyer and you want inventory, we have more inventory in the market. I think the last time I looked in February, we had 1,700 more homes for sale than last year at this time. And that's like 10x what we had in 2022 in February. So we have more homes for sale than we've had in 15 or 20 years. And rates are coming down. And we'll get to the bipolar of the market. But you got lots of inventory that doesn't move the first weekend. There's still plenty of opportunities to be able to negotiate with sellers.
Hey guys, this is Jordan Moorhead here, and I wanted to ask if you could do a huge favor for me. If you could go leave a review for this podcast wherever you're listening to it, that would really help me get this into the hands of other people that are interested in information about Austin real estate investing, and I'd be able to help more people. Thanks, guys.
And you just don't know unless you make that offer. I think that's the hardest thing is everybody wants to see the price go down. But you might find somebody that listed at 500 that's willing to take 425. But you don't know that until you offer it.
Gotta make the offer.
What people are looking to see is they want to see them drop it to 425. And by the time they do that, everybody else jumps in and you've got a problem. I think that's so hard to understand as a buyer when you're used to looking at the price of something, especially in America. You're used to looking at the price of something as it's listed and expecting that's what you're going to pay.
Yeah.
But in real estate, the price, and I've learned this even more as I've started to buy more commercial real estate. Price it's listed at is nowhere near what it's going to trade at a lot of the times.
Yeah.
But you can just even see that with the residential listings in Austin. If you look at where they're priced and where they sold, you're fooling yourself if you think where it's listed is where it's going to end up. And that's also another problem for people in Texas because we're on disclosure. And they say, oh, well, I see everything around me is listed at X, when in fact it sold at Y.
It sold at Y. Yeah. In fact, I looked this up on that note. There's a statistic called original price to sold price ratio.
Yeah.
Typically right now, that's about 8%. So in other words, if you listed at 500,000, you didn't get your buyer, you drop it 20 or 25K, and then you get a buyer, and that buyer is coming in below that list price from the original 500 and you sell at 460, you were off about 8%. That's where we're seeing the market right now. Yeah. And then from your final list price to close, that's 2.5 to 3%. So it's still, even after you've, for a lot of sellers done that price reduction, you're still maybe not selling at list price. So that's to that point, the list price is simply advertising. It's a guess, educated guess, hopefully by the listing broker and the seller to see if it's fair. Some houses, if they nail it, that house is in great condition. It's what every buyer's looking for, and they get the price right. There's several houses we're seeing with multiple offers. I'm bidding on one today. Other houses, it's just a little bits off. It doesn't have to be much. It could be 10 grand. But if you miss the first weekend, odds are it's a little more of a slog for the seller to have to see where the market is and see when the buyers are going to bring them offers.
Well, I think you make an interesting point. And it used to be when you price it right, it's going to move quickly. Now it matters a lot where the property is, what it is, how it looks, essentially what value are we seeing in this property?
Yeah.
And I think the problem, I have a resale home listed in a new build community in Kyle right now. It's not
That's
fun.
hard.
It's tough.
I already know where that's going. Yeah.
Yeah, because everybody's looking around, and if you're looking within, let's call it a mile, you're looking within a mile of this home, there's a bunch of other homes for sale that
new
are resale
builds too,
that are cheap. There's a bunch of new builds that are cheap that have rock bottom interest rates compared to everything else right now. They've got warranties. They've got everything being thrown at them.
Nobody's ever lived in it. Yeah.
Nobody's ever lived in it.
Yeah. It's tricky.
It's so interesting because we just listed one and we're closing here in the next few days at 10% over list price in an established neighborhood in a great area. And it's on the higher end. So that I alluded to that earlier on in our conversation. Most what we list is right in that medium price point, the 350 to 400 to 500,000. And that's a tricky spot to sell in right now. unless it looks amazing, it's in a great area, and it's priced right.
Yep.
But if you get up into the higher end where people seem to have nothing but money,
that's right.
They're flying.
We're seeing that right now. And there's kind of some title companies will come out with these charts. I call them heat maps, and they do it by zip code. And they'll say, hey, in the last month, these zip codes saw an increase in the median price. These zip codes saw a decrease. And it's very hot and cold around the market. Now, the past couple of years, the whole map would have been cool or cold. Now we're starting to see those pockets heat up. And just to your point, the west side of Austin is typically a little more the luxury side, higher than median price point. Those are doing fairly well, especially if those homes are fixed up. And there's not nearly as much new construction, except for like uber luxury, like 4 million and up.
Yeah.
There's a lot of new construction there. But if you're in that nice upper middle class to luxury spot, we're seeing that start to warm up. To your point, I call it kind of the cupcake theory of like the icing is selling. It's selling fast and it's selling really well. That's the sexy, nice, updated, well-priced homes. All that cake underneath, which is like an average house. It's okay. You know,
great house.
There's not anything like very updated with that house. Man, there's thousands of those. And so what's happening is, unless it's a discount or it comes with some other way that it's incentivizing buyers, it's much harder for a buyer to want to buy that house because they're probably feeling the pinch of the economy. They've, like everybody spent all their money from COVID. And so they're kind of getting a little tighter on their budgets. And so they don't have 20, 30, 50K after closing to want to come in and do those remodels with the floors and the
they don't want to do
countertops.
anything.
They don't want to do anything. And so because there's a lot of inventory,
they want a great deal.
Buyers
on a great
don't
property.
have to do it, right?
Exactly.
Like when there wasn't anything in the market, the buyer's like, okay, I'll do it.
I'll do whatever.
I'll do whatever I have to do to get this house. Now I don't have to. I can just hunt around long enough and I'll find those houses that are updated. What they find though is what they're going to, this is where all the other buyers want too. And boom, they run into a multiple offer situation. So it's a very bipolar market where you might go to some houses, been on the market 90 days. They're not terrible. They might have been off on price when they started or the conditions a little off. Those you can definitely negotiate. And then you turn the corner and they find that good one. And it's maybe at the same price of the one that wasn't as fixed up. They think they found a deal and then bam, all of a sudden they run into multiple offers. So that's kind of what I feel like I'm seeing in the market right now.
Have you wanted to be part of GoBundance, the tribe of millionaires, but just haven't hit that millionaire status yet? Well, now you can, not even being a millionaire, by joining our new program, GoBundance Emerge. My name's Jamie Gruber, creator of GoBundance Emerge and member of the GoBundance community. And now you can join. GoBundance.com/emerge. GoBundance.com/emerge. Use code Jordan for $100 off this 12-week goal-setting program and mastermind that'll propel you to being a whole life millionaire.
We just closed with the buyer at 1.27. It was multiple offers.
Yeah.
You know, and I think I do a lot of listings of remodel houses for flippers. And a lot of times that happens. Everybody seems to somehow find it at the same time. And we've got people competing. We're not getting as many multiple offers. It's almost unspoken offers of, hey, we're going to write an offer. We want to write an offer. Then we get one offer comes in and the other guys hear about it and they walk away. Yeah. I'm seeing people not be as interested in getting in the multiple offer situation, which I've never understood because it doesn't cost anything to put an offer in.
No. And I think on the multiples I've seen, we're talking 2 to 5 offers. This isn't the 30 offers kind of deal. It's somewhere above 1. Okay. So it's 2 to 5 typically. And the winners, I mean, granted, I've seen some go for that 50K over and more. But typically, sometimes they'll win at 5, 10K over, or they'll win at 20K over. So it's not always like some huge giveaway. And they're still keeping a number of their contingencies too. Like it's not like the pandemic where you're getting rid of the appraisal and buyers paying for everything. No, they still might have an option period. They still might have their appraisal. They're still going to have some of those standard contingencies. They're just winning on price or maybe on a few other terms that benefit the seller. I think because there's a lot of inventory, that's where you're seeing those buyers say, well, I don't have to be in multiple offers over here.
I'm gonna keep
I'm like, that's true. That's why that house isn't as fixed up.
Yeah.
Are you willing
Good point.
to skip the multiple offers? I can show you lots of stuff that isn't quite as fixed up if you're willing to do 10, 20, 30K of projects.
It's astounding how hard it is for people to understand it. And I was talking to my dad the other day, and he had a realtor. He is a realtor.
Yeah.
He had a realtor buddy come over, and he was trying to get away with not fixing up stuff in his house. He's looking at selling. She's like, Steve, you gotta do these things, or somebody's not gonna pay you full price for this property. But even in our area, in Southwest Austin, there's so many really nice properties and really nice areas that are not remodeled.
No.
And you're like, man, spend that 20 or 30 grand and you're going to get 50 or 60 more.
Totally.
It's wild that people
even
just,
paint.
they don't want to do it.
Paint your
they say,
house.
well, I'll leave it for the buyer to do it. That's not how it works. The buyer wants to pay you to
buyers don't need to do it.
Yeah, they don't want to do it.
That's the difference. Is like in the market when you have tighter inventory, buyers will calculate that they're going to have to do some projects after closing. But when you have this much inventory, you don't just go wait until you find the houses where they've done enough.
Perfect move-in ready.
Or within, 20K or less of projects, maybe floors and paint. Very simple things. They can find those houses today. They don't need to come in and redo all your carpet and, redo appliances and cabinets, the heavy lift. I feel like that's the part of the market that doesn't move very well, is if you've got some heavy lifting to do, it either needs to be a real big discount so that the investors will buy it and do that work, or you're going to need to put a little capital into your property before you go to market, because you've got to compete with buyers. It's musical chairs. What I tell my sellers is, in the middle of the pandemic, there were 10 buyers and 1 chair. Now we have 10 chairs and maybe 5 buyers. So there's more chairs. Yeah, there's more chairs than buyers. And that's why days on market have gone up. That's why some properties end up not selling at all. They just withdraw or rent. They're doing something to be done.
Yeah.
The rest of them are going to have to do what they need to do to compete. And that's either going to be condition or price.
Yeah. I had one recently that just rented. We dropped price a couple times, couldn't sell it. It was in a tough area of Round Rock where it's generally cheaper. There's more options that are newer and bigger. And hey, I don't want to lose money on it. I'm going to sell and I'm going to rent and wait a couple of years. I
think you'll see that status too. I think the areas that are heating up right now typically have the least amount of new construction. These are areas where you've got to build or do heavy remodels to improve those homes. You're not competing with a lot of builders and all these new neighborhoods. As you get into the suburbs, it's almost the opposite. You get into Leander and Georgetown and Hutto and Kyle, man, there's lots of new construction to choose from. The price points really are tighter. They're not that different between the resales and the new builds. And so it's much harder for the resale sellers to compete with those builders unless you're just on a great lot, or you have some other, HOA that's already built out that you really want to be in that school. Some of those things might move those homes, but it's getting much harder to move that inventory if you're competing too much with the builders.
Really challenging. Yeah, absolutely. So I guess we're both selling homes to with buyers and sellers right now. I always like to give people ways that they can get the job done. Obviously, it's easier for buyers right now. We can talk all about that.
Totally.
But for sellers right now, we're still selling properties at or close to list price and in a reasonable amount of time. I just want to hear kind of what's your perspective and what are you seeing with sellers that's being successful, and what's not working with sellers right now too.
Yeah, I think this is where the hard job is on the listing agent at the beginning to set the market and the expectations with the seller.
Yeah.
Leaning heavier on data and also explaining kind of the, don't make it a given that you're going to sell.
Yeah.
It's not a given.
Oh, absolutely.
You got to work at this. Like I said, there's more sellers than buyers, period. So it's not a given. Don't assume, we're either going to sell at this price or this price. No, we need to sell, period. What do we need to do to get your home ready? And so typically we'll give them kind of a laundry list of recommendations with at minimum, I want to paint this thing if you've been in here longer than a couple of years, because you're just going to have wear and tear. Buyers need to feel like the house got freshened up for them. The more move-in ready you can make that house, the better. We're starting to look, I haven't done it as much, but I think this year we'll start doing more pre-inspections and start saying, hey, sellers, Do you want the buyer to be the first one to find out the surprises, or should we find out now? Let's solve some of these challenges, your objections. Maybe your AC's old. Maybe the roof needs replaced and you haven't looked at it in a while. Your gutters are broken. Whatever it is, can we actually fix some things for the buyer to entice them? And you've now disclosed all the information they need to know. It makes it a little less scary for the buyer to be able to approach the house and not feel like there's going to be surprises. This, I think, applies more to older properties. So, if it's a newer property, it probably doesn't need as much, but you start getting into the 1980s and older.
Oh, yeah.
These homes have been around the block a while and some stuff's going obsolete or outdated. And a lot of sellers, not to their fault, they don't even know.
Yeah, sure.
They haven't fixed stuff in 20, they haven't thought about the roof in 15 years. And so knowing what we know about the insurance market and just inspectors and what they're going to be pointing out to their buyers, I like to tell my sellers, hey, if we can get in front of the buyer and actually solve these objections before they even bring them to us, we can have our negotiation right up front.
Well, we might be able to save a lot of money too.
And save money.
You might be able to get the roof and the gutters and those types of things covered by insurance.
You got to spend money to make the money you want, which is the closing table.
Yeah.
There's no way around it. It's a lot easier to negotiate it up front than it is when you're in the middle of the option period and the buyer is hanging the, get out of jail card over your head. If you can just do all that before you even go under contract, you still have a little more control as a seller. And so those are things we're looking at, is to how much can we improve the home, solve the objections before we even hit the market.
Jordan Moorhead here. Really quickly, wanted to tell you a couple other ways you can keep track of us. If you want to listen to all these podcasts and ask questions, the Moorhead team on YouTube is the best place to be. And then Austin Real Estate Investors on Meetup is a great place to keep track of all of our meetups we have going on.
And we've had some weird weather around here the last couple of weeks with the wind has torn down fences and ripped off carport roofs and all sorts of stuff. I just had one inspection on a listing. It ripped a big metal sheet off the carport roof.
Ooh.
And we didn't even know it, because that windstorm just happened last week. So I think with what I'm seeing with sellers, if you're in a cookie cutter neighborhood, it's all about price. But if you're not, just like you just mentioned, go at it, make it perfect and move in ready. You got to find something where the buyer is just so excited to move in. They're not going to have to do anything on the home at all.
It's got to be turnkey enough. And even simple stuff like a really good deep clean.
Yeah.
I'm shocked at how many houses haven't quite done that.
Oh my
gosh.
You're
like, your bathroom's still a little grungy. Those are such little details that for a couple $100, you literally could have solved an objection for a buyer that would have written an offer on your house, and now they don't want to because they feel the house is too dirty.
Well, you get one shot. I think that's the important point too, is that you get one shot. It needs to look amazing online to draw people in. And when people get in, they need to pull up and the house needs to look great. They need to walk in. It needs to smell good and look great.
Yep.
Like it's all about first impressions right now, because you're not, like you mentioned, there's so many fewer buyers out there. So you have to take advantage of the ones you get and make those really count.
I think the other thing with sellers too, is you have to remind them that buyers don't buy in a vacuum the way the seller thinks about their house in a vacuum. Buyers are going to see probably at minimum 10,
a dozen houses,
up to 30 or more houses. They're going to buy one.
Yep.
That means if they looked at 30, 29 sellers got a no. So what makes you the yes that stands out among those other sellers? And so that's a different way to look at it, is like, your price might be in line with 5 other homes. They all have an A next to it. That means they haven't sold yet. So I really focus harder on those closed and pendings, because in a market like this where you don't have a lot of activity, sometimes you really need to see, well, what are the things that made those houses sell? There's a reason, and it's usually condition, or they got the price really attractive up front so that they could generate enough traffic to get those offers.
Well, and you mentioned it too. I mean, you just mentioned it. So I think a lot of people are taught or think about, I'm only looking at closed sales. I look at both. I look at the active and the closed, because you have to look at what your competition is.
You're competing with the actives.
Yeah, that's your competition. You're competing with them. And then you have to look, where did properties actually sell? So those might be a difference there, but you have to use both of those to weigh where do I properly list it where I'm going to get it sold quickly and at a high price. I also think something that I'm having trouble with listings more than anything right now is, we talk about in the beginning, we set the expectation, hey, this is a 3 to 6 month process. Yep. It's going to take some time, but it's hard when you're a seller and you're sitting there and you're not seeing anything happen. Maybe you're only getting a few showings a week.
Yeah.
Because there's not that many buyers out there.
Yep.
But it's hard to be patient and not just want to cut the price and cut the price and cut the price. I stopped quite a few sellers. Say, hey, let's hold off. Let's wait another couple weeks and see what happens. It's not every week we need to cut the price until it sells. It's, hey, we're still getting showings. People are still looking at the house. The feedback isn't bad. We probably just want to be patient. It's just going to take time. And that's the hardest thing I'm dealing with right now with sellers.
I agree.
Even when everything else is perfect, just taking time.
And I try to give them what I call a traffic expectation.
Yeah.
Of like, the offer is clearly what we want, but we also need to see traffic first.
Oh, yeah.
Because you're going to need 10 showings, 20 showings, whatever your number is, depending on the house. I need to see that many before I would expect an offer.
Mm-hmm.
And so right now I'm like, I want to see 10 to 20 showings. Not that that's before we would lower a price, but I'm gauging how quickly do I think we'll get to that 10 to 20. I mean, if we're trickling in one showing a week, it's going to take us a really long time. And then I go back to the data and go, well, how much am I actually competing against right now?
Mm-hmm.
I've got a condo near the Domain. I think we're in great shape. We're under 300,000, 2-bedroom, 2 full bath. You could walk to the Domain if you want to.
It's amazing.
Yet there's a lot of inventory in that zip code. They're not, one a month of these condos at this price point is selling a month, and there's 20 on the market. So that one is going to have a different expectation than maybe, like you said, Southwest Austin or Westlake or certain areas where there's only 2 or 3 months of inventory. Things are moving a little better.
Mm-hmm.
Okay, I need to see that traffic faster. So some of it is setting kind of a gauge of that traffic expectation to let them know, hey, if we're not getting the traffic, it's probably the price, because these other homes, they are getting the traffic. We'll call other, like you will too.
Mm-hmm.
We're going to call other listing agent. Hey, how's your listing going down the street?
Yeah.
Are you getting traffic? Because I need to know, hey, why are they looking at you and not me? Something I need to change. So we're gauging traffic to try to get a feel of the market so that sellers have an idea. Hey, is this normal that I should only be getting 2 or 3 a week? Or is that good? Or is that too slow?
Mm-hmm.
So they haven't, while we're waiting, so they have an idea of what the market's doing for them. And is it picking up?
Yeah. Yeah. I know. I love getting feedback from other people to see what's going on with their stuff too. So on the seller side, still selling, you got to make it look great. You got to price it right. You have to be patient. So important right now. On the buyer side, I think we're seeing, as much as anything, people are reading the headlines and they're thinking they can just steal everything. I'm not seeing it happen that often. We have gotten as much as 24% off on properties recently. So there's deals are happening.
Can happen.
Yeah, you just have to be.
Got to hunt a little harder.
Yeah, again, I think patience comes into it too. You have to be patient in how many offers am I going to put in? Yeah, we saw it was getting close to a buyer's market, or people were saying it is a buyer's market, but why can't we just steal everything? That's not really how that works. You have to be patient. It takes time. And you have to put in a lot of offers still.
This is where I think that bipolar market comes in too.
Mm-hmm.
When did that house list? Oh, yesterday?
Yeah.
Yeah, probably not going to take that big low ball. It might if they knew already they were wrong, but odds are those are the few. Those are the few, I think, that might get multiple offers. In fact, that's one I'm bidding on today. Just listed this weekend, and I could tell when we were there it was already getting traffic. So, but the other ones, how long have these sellers been on the market? Let's have a conversation with the listing agent. Hey, how's traffic been? My client's thinking about an offer. They'll probably give you a hint if they're ready to chat. And so, and then I'm exactly like you. I think it's funny how much I have to encourage the buyers to make that offer.
Yeah.
I feel like just make it. It costs you $0. I mean, I'm the one doing the work of taking the time to write it up. You just have to click some buttons to sign it. Let's put the offer in. Worst they can say is no.
Yep.
The best they can say is yes. And in the middle, most likely, is a counter. And great. Then you can decide, is that attractive or not?
Yeah. And it's so surprising. how hard it is to make that offer for a lot of people, but it's also so surprising how many people there are who are just oblivious to where they're priced as far as sellers. I talked to one today. It's been on the market for 256 days, and they're firm on price.
Yeah.
Clearly, it's not selling. And we put an offer on another one 2 weeks ago now. We still don't have an answer from them. And they've been on the market for around 6 months.
Yeah.
I mean, obviously you're not going to sell there, but you're right. You find those people who just know they price too high and they need to sell by a certain time. There's death, there's divorce, there's dislocation, whatever else they're going through. People go through stuff even when the market's not great, or even when the market is great, and are more motivated to get moving. So, but if you don't get out there and make those offers, you're never going to find that out.
Make sure to come check out our meetup, Austin Real Estate Investors, here in Austin. That is every second and fourth Thursday of every month. We would love to see you there. Again, it's Austin Real Estate Investors. You can find it on meetup.com.
And you and I have learned this. Mm-hmm. You can't ask the listing agent.
Yeah.
Like the listing agent's going to hold their cards to their vest.
Yeah.
Because they're not going to go, oh, yeah, the seller will take 20% off. Nobody's ever going to say that.
Yep.
So the only way to actually know how a seller will respond is you have to give them a formal offer.
Yeah.
You can't email them and say, hey, I'm thinking of giving you this number. You can't text them, hey, would your seller accept this? No, give them a formal, real deal offer. If they like it, they could sign it. I find that is the best strategy. Just don't fake it. Just give them a real offer. Like, hey, this is legit. Here's my lender. Here's my real offer. I can buy. You just got to talk to us.
And I found this interesting recently. We lowballed somebody, and you could clearly aggravated the agent. The agent was upset that we sent him a low offer. I think it makes an agent feel like they're looking bad when they bring a low offer. He was clearly aggravated, but then he presented it to the seller, and the seller took it.
Right.
So where his perception of where the offer needed to be versus what they were willing to take,
right,
that's coming back to you need to make an offer. The agent might say, there's no way, they're not taking anything, but then you present them the offer.
He assumed.
And they'll say, okay. Or they don't want to present a low offer. They feel like I'm going to fight for them and get it up. And that is our job, is to get the price up.
That's right.
Get them as much as possible.
He was probably trying to figure out how to defend it, and that's fine. But yeah, I would say talk to your sellers first. And present it first, and then see if you need to push back or say no, thank you.
We're obligated to present all offers.
Obligated to present.
Unless we've been told by the seller, don't present me anything less than X.
Have the conversation. Because at the end of the day, if we've done our job right as a listing agent, then we've been informing the seller of the market and what should the expectations be? How many buyers are out there? I mean, you're making podcasts, I'm making videos. We're putting content in front of our sellers every day to kind of fill them in on the market. It shouldn't come as a surprise that the market's going to be a little tough and it might take a while, and you should take every buyer seriously.
What you just mentioned there, it might take a while. You might run into a seller that doesn't have time to wait.
Yeah.
If you're a seller and you have time to wait and you can be patient and you can wait for the right price, you're probably going to get it. If you're a seller that's in a hurry, sorry, you need to go. It's a tough time right now.
You got to make the call on what's going to get that house moved. And I think that's why, I mean, you and I both work with investors too. There's always going to be an investor pool. They'll make you an offer. It may not be the number you want, but there are people who will buy your house and fix it up and, flip it or keep it. There's always going to be that market. For most sellers, they don't want that because they're hoping to get a certain price, but it does. It comes down to that convenience factor. How fast do you need to move?
Button, it's going to cost you.
I think it's going to cost.
That got so misconstrued in the crazy time when Open Door was paying 97% of list price. Now even Open Door is paying 80%. 75%.
Because they figured out if you're going to be a wholesaler, which is a great. I mean, it's a business model. It should exist. I like that it exists. Why? Because it creates a floor. If you got to sell, somebody will buy it.
We can get you those offers.
Yeah, I can get you a cash offer in 48 hours if you want. And so, but all those companies took a bloodbath because they had the wrong structure at the time. They were trying to win market share, and it kind of worked, but really it just put all the other ones out of business. But, those companies will stay in business if they structure it the way that the traditional wholesalers do, where you need 20, 30% margins so that
Well, they're
you
doing
can
it
take
now,
the
and
risk
they'll
to
tell
take it
you-
back to market.
They'll tell you they're doing it now. Even
Good.
I mean, they'll say, "Hey, we're buying it. We'll give you 25. We'll buy it at 75% of the market."
And they
value."
should. I mean, you and I could, if I had a little more cash lying around, I'd
Yeah.
probably do it with my sellers too,
Yeah.
and just wholesale it. But that is a good section of the market. They skewed it because they were offering regular retail prices,
Yeah.
and they all got caught with their pants down when the market flipped. So now they're structuring it right, and that's where I think you'll see that part of the business start to stabilize as the backup plan for sellers that, hey, can't go retail, I got to sell. Hey, here's some backup options for you to get it moved.
Yep, absolutely. So the point of the matter is, if you got time and you got a little money to put in your house, you can still sell it for a great price. You can still get your price you need. Obviously, we'll tell you what that price is. But if you're a buyer out there, you said it early on the podcast, I just don't think there's been a better time to buy in a long time. And you'll get the argument of, oh, well, rates are high, but you get one shot at the price. And right now it's a great time to get a great price. And I don't know when that's going to get worse. I don't know if it's going to get better. I just know it's a great time to do it.
I think this is kind of our prognostication moment of the show, but if you look at historical trends, Austin is probably ahead, I think, of most national markets, meaning we kind of had to correct first because we got so hot. We have already, some people think, oh, Austin's going to crash. I'm like, have you been looking? Like, we've been in a correction for 3 solid years. I mean, basically April 2022 is when the rates started really going up.
I remember.
I mean, we're hitting the 3-year mark now. So if you look at the charts, Austin's starting to level off. It's
starting to go back up. Even.
Yeah, in some sections, you're already starting to see a little appreciation. The market as a whole went down about 2% February to February. I mean, for what we went through the last 12 months, that's really pretty flat.
Yeah.
And like you said, we're seeing the average price start to go up, which means what? Those nicer, higher properties are selling. So that's a good sign. I think the luxury market's starting to correct or improve already. And so with buyers, I always say the way real estate works is it's going to stay the same until it doesn't. And when it doesn't, it's a light switch.
Yeah.
Like when we went into the pandemic, it was within weeks that we went from one type of market to another. And when we ran out of inventory or the rates came down, boom. I mean, it was like literally somebody flicked the switch that everybody needed to buy a house. And then the second the rates went up, it was like they flicked it back off and said, nobody needs to buy a house.
Yep.
And now I feel like, okay, we're kind of coming out of that. When does the switch hit? I can't tell you. It could be this year. It could be next year. But if you're a buyer, you can't assume that the market's going to stay like this forever. I think you have a really nice opportunity right now to get in any neighborhood you want, multiple choices in every neighborhood, sellers that you can negotiate with. Yes, the rate's not maybe what you want, but we don't even know what a future normal rate is supposed to be. Is it supposed to be 4 or is it supposed to be 8? So, 5 and 6 historically is pretty traditionally normal. But when it switches, you'll know, and you'll know you missed.
Yeah.
Like if you waited until, and then all of a sudden all the buyers come back into the market, you're not at that point still going to have opportunities with these 6 months on market sellers to negotiate with.
Well, and if you're buying, I always tell people, don't buy if you need to move or sell it in the next few years. If you need to sell within 2 years, it's probably not the right thing to buy. You should probably rent. But if you're going to be here for 5 or more years, or you're going to buy an investment property and hold it for 5 or more years, it's a phenomenal time to buy. So if you have a long enough time horizon, and being a reasonable time horizon, it's a phenomenal time to buy. Because if interest rates do come down into the 5s, everybody's going to jump back in. Prices are going to jump back up, and it's going to be much harder to find a property. If they don't, if they stay where they are, you have the pick of what you want, as you just mentioned. You can buy where you want, what you want, at the price you want. It's a great time to buy.
And our population is still growing.
Yeah.
So,
we're running out of houses.
Some people feel like, well, it's slowed down because nobody's moving here anymore. I'm like, oh no. Like 2 of the 3 fastest growing suburbs in America are still Georgetown and Kyle. Leander and Liberty Hill are up there. Like Austin is still booming. What really slowed us down, yes, the rates, but also just supply. Like this was a hot market. We have all the home builders. They're building office towers. They're building apartment complexes. So it's going to take the last 3 years, maybe another little skosh to fill some of this up. But the commercial multifamily brokers that I talked to were like, oh, we're filling them up. It's just we built a lot. And so, but there's going to be a date pretty soon when we're going to start to see that occupancy start to get there.
That's I was going to make that point.
Yeah.
They're not starting a lot of new construction projects on multifamily. They're finishing them.
Correct.
And they're filling the ones that they've just recently finished. In the next year or two, we're going to be back to having a shortage of rentals in Austin. Right now, we have an abundance of rentals in Austin.
Hard to kind of explain that to clients is like part of why you're seeing the rents soften and the prices soften is simply because we're in an abundant market where we have lots of new stuff.
Yeah, it doesn't last
But that
forever.
new stuff is going to get bought up. And then there's not as much new stuff coming down the pipe. And so it almost by nature is going to make prices go back up. It's going to make rents go back up. It's going to take a minute. We're finishing out that cycle, which is why it's almost telling you not where the bottom is, but where the shift is. And we're kind of on that later end of the, repricing the market shift. I think pretty soon, like you said, we're already starting to see little signs that appreciation's creeping back into the good stuff. How does it get to the whole market? It's when we start filling up all that new build and it's no longer there. And now people are back to competing against that resale market. That's why the Northeast has stayed hot. They don't have a lot of new construction up there.
Yep.
And so it's just people bidding on the same homes over and over.
Yeah.
We were that way before. And now we built a lot of stuff. But once that starts to fill up, you're going to see people have to get back in there and re-compete on the same properties while we're still adding more population. Give that another 12 months. I think that's where we're headed.
Yeah. It'll be interesting to watch.
Yeah.
Ryan, thank you so much for coming on. Always fun to talk. Anybody needs to reach out to either of us. Ryan, what's your email again?
Ryan Kelly, KELLY@KW.
All right, Ryan Kelly. I'm Jordan.Moorhead@KW.com. We will talk to y'all here soon.
Thanks, Jordan.